Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial. Thanks for joining me today. We're talking about IRS debt today, what to do when you can't pay the IRS. A little bit timely, tax season is here, at least depending on when you're listening to this. And, taxes are always on our mind throughout the year, but it's especially prominent during tax season. And so you never want to have tax issues. Sometimes it's unavoidable. Maybe you had some unexpected events that led to large tax bills, or maybe you're a business owner and neglected to pay quarterly estimated taxes. And whatever the reason, it can be stressful when you find yourself unable to pay the IRS. It's a situation that nobody wants to be in. And it can be stressful, but it's really important to know that there are steps you can take to address the issue, and there are solutions. So we're going to talk about that today. So first and foremost, I want to say it's important to remember that ignoring tax debt only makes it worse. If there's one theme I want to stress throughout this entire episode, it is do not ignore the problem. The IRS has lots of collection methods at its disposal, including wage garnishment, levies. You don't want to ignore debts to the IRS. It's just the worst possible debt you can have. Well, I shouldn't say that. There's always exceptions, but it's not a debt I want to have. So by taking proactive steps, you can mitigate the potential consequences and work towards solutions to resolving tax debt. So if you feel overwhelmed and unsure of what to do next, don't worry, you're not alone. It happens to many of us, and there are options for resolving tax debt. So let's jump in. So first, let's understand tax debt and its consequences. So it's an uncomfortable reality. A lot of people face this. It happens when you owe the IRS more money than you can afford to pay. That's when you get tax debt. You always want to prioritize tax debt, as mentioned before. When you rank it against other debts in your life, typically we want to put that at the top to knock out as quickly as possible. So when the IRS first realizes you have outstanding tax debt, they'll send you a notice demanding payment. The notice will outline the amount you owe, includes any penalties and interest that have accrued. And it's really essential to take the notice seriously. And again, don't ignore it. You'll see a theme over and over. Don't ignore it. Ignoring it only worsens the situation and makes it more difficult to resolve later on. I've seen way too many people ignore IRS notices and let tax debt pile up, and then things get much harder later on. So here's some of the consequences. If you ignore IRS debt, some of the consequences can include, first, penalties and interest. The IRS charges penalties and interest on unpaid taxes. And it's going to add up pretty quickly, which increases the total amount that you owe. Also, tax liens. The IRS can place a lien on your property. A federal tax lien is a legal claim to your property, including property you acquire after the lien arises. So this can affect your credit score and make it difficult to get loans as well. They can also do tax levies. The IRS might levy or legally seize any type of real or personal property that you own or have interest in. For instance, the IRS could seize and sell property like vehicles, boats, or real estate. They could also levy property that's yours but held by someone else, like your wages, retirement accounts, bank accounts, rental income, accounts receivables, cash loan of life insurance, or commissions. Also, refund offset. If you're due a refund from the IRS, they might use it to offset your unpaid taxes. Passport revocation. Also, for significant tax debt, the IRS can certify your debt to the State Department, which can then deny your passport application or renewals. In some cases, that might even revoke your current passport. Also, criminal charges. These are pretty rare, but in cases of tax evasion or fraudulent filing, criminal charges can be filed, which could lead to fines or even jail time. Can also impact Social Security benefits. Unpaid taxes can lead to a portion of your Social Security benefits being levied. Can also impact your business. If you're a business owner, unpaid taxes can lead to seizure of business assets. And of course, that affects your ability to operate. There could also be professional consequences. Certain professions have clauses in their contracts or code of conduct regarding the fulfillment of legal obligations, including tax payments. So non-compliance could affect your professional status or professional licenses. And just the personal stress and financial strain. Constant worry about unresolved tax debt can be stressful, and that affects everything in life. So again, ignoring the problem usually leads to more severe consequences over time. So will you get thrown in jail at the first letter? Absolutely not. But, I shouldn't say absolutely. There's always exceptions, but typically no. But the longer you ignore the problem, the more severe it gets, the more chance you have of consequences getting more severe. So what are some of the reasons for tax debt? There's several common reasons why people find themselves unable to pay their tax debt. Some of the reasons include financial hardship, just simply unexpected financial difficulties, job loss, medical expenses, business downturn, stuff like that. Also, just underestimating your tax liability. This is a big one. This happens a lot, especially with business owners. So, failing to accurately estimate your tax liability or not setting enough money aside for taxes in the form of quarterly estimated tax payments can leave you behind and give you a pretty hefty tax bill that you might not be able to afford to pay because that money was not earmarked for taxes or set aside and paid. It was spent somewhere else, and now you don't have it. Also, tax return errors. Mistakes on your tax return can result in an audit or additional taxes owed, which leads to tax debt. Again, self employment taxes. If you're a business owner, setting aside quarterly estimated taxes is key. Sometimes people don't understand how to do that. They don't know how much to set aside. They forget to set aside money on a schedule. They forget to submit the payments. It's just something you have to do on your own if you're a business owner. So a lot of people just don't do it and they end up getting behind. So be sure you understand the reason for the tax debt if you have tax debt and address the root cause going forward so you can make better financial choices going forward as well. So, what steps can you take when you can't pay the IRS? What do you do? So, again, taking immediate action is super important. Here are some of the steps you should consider. First, review your finances. First, take a look at your financial situation, income, expenses, assets, make sure you know how much you can realistically pay toward tax debt. Then communicate with the IRS. Contact the IRS as soon as possible. Let them know about your situation. Don't ignore the notices. Explain your financial hardship and explore the options available to you. File your tax returns. Even if you can't pay the full amount owed, go ahead and file your tax return on time to avoid additional penalties. Filing your returns will help you gain a clear understanding of your overall tax debt as well. And get professional help. If you're looking for help, which is probably a good idea in a situation like this, look for help from a tax attorney, enrolled agent, or CPA. These professionals specialize in tax and can guide you through the process. So when you're communicating with the IRS, be honest, be transparent, be prompt. That's kind of the key here. Keep good records. Maintain detailed records of all your communications with the IRS, including dates, names of representatives you talk to, and any agreements or resolutions that you reach. Respond promptly. If the IRS requests additional information or documentation, respond promptly. Delaying or ignoring their request can lead to further complications. Be honest about your financial situation. Provide the IRS with accurate information about your income, assets, and expenses. And this will help them assess your ability to pay and determine the best course of action. And ask for clarification if you need it. If you don't understand something or need clarification, don't hesitate to ask. The IRS representatives truly do want to help you. Typically, you're going to find that they're going to be helpful and want to help you resolve the situation. And I want to stress on this note that the IRS is typically easier to work with than most people think. As I've worked with clients on these situations, the overwhelming majority of them have shared that the IRS has demonstrated strong desire and willingness to be flexible and create a payment plan that works for them. So I know there's a lot of negative perspective on the IRS, and some of it's justified. But in general, I found that the experience that most people have in working with representatives to set up a payment plan and resolve tax issues has been positive. The IRS does want to help in general, or the agents specifically working with folks in these issues do want to help. So, what are your options? There are several options for individuals struggling with tax debt. So, one of the most common is setting up an installment agreement. This is one option for those unable to pay their tax debt in full, and that is to set up an installment agreement with the IRS. It allows you to pay off your tax debt over time in smaller, more manageable monthly payments. So this gives you relief by spreading out the financial burden, giving you the opportunity to catch up on those tax obligations on a payment plan. To set up your installment agreement, you submit Form 9465, which is the installment agreement request. And this form asks you to provide details about your financial situation, income, expenses, assets, and the IRS will review the application and determine whether you qualify for an installment agreement. If approved, they'll outline the terms of the agreement, which includes the amount you need to pay each month and the length of the agreement. Typically, if you need an installment agreement, typically these get approved. But it's important to note that this does provide temporary relief, but you still have to pay the debt. You're still responsible for paying interest, penalties, anything accrued during the repayment period. And if you default on the agreement, the IRS can take further collections actions against you. Another option, offer in compromise, which is a negotiated settlement. So another option is to apply for an OIC, which again is an offer in compromise. An offer in compromise is a settlement agreement that allows you to pay a reduced amount to settle your tax debt. It's a potential solution for those who are unable to pay their debt in full or would face financial hardship by doing so. The form for this one is Form 656, which is called Offer in Compromise. And you're submitting a detailed financial profile to the IRS. You have to disclose your income, expenses, assets, liabilities, and the IRS reviews your application and considers factors like your ability to pay, your income, your expenses, your assets, equity. And if it's approved, they'll accept your offer and you'll be required to pay the agreed upon amount. So it's important to understand that applying for an offer in compromise does not guarantee acceptance. The IRS evaluates every application individually and will only accept an offer if they believe it represents the maximum amount they can expect to collect from you. Additionally, there's a non-refundable application fee that you may need to make initial payments toward your offer. So this is not as common, doesn't always go through, but it is one option. Another option, applying for a temporary delay or hardship status. So again, if you're facing financial hardship and you can't pay your tax debt, you might be eligible for a temporary delay or hardship status. And this allows you to temporarily suspend collection activities while you work toward improving your financial situation. To apply for a temporary delay or hardship status, you contact the IRS and explain your situation in detail. And they're going to ask for evidence like evidence of unemployment, medical expenses, whatever extenuating circumstances prevent you from paying your tax debt. And they review your situation and determine whether you qualify for a temporary delay or hardship status. So it's important to note that a temporary delay or hardship status is not a long-term solution. Doesn't eliminate the debt. It just provides temporary relief from collection activity. So it's basically a pause. You push pause on the debt, but you still do have to pay it. So you want to be sure you explore other options like setting up an installment agreement or applying for offer and compromise before you go this route. Because again, it doesn't really change anything. It just delays. So again, I want to stress, be sure to ask for or to look for professional help in these situations. Navigating tax debt can be complex. It can be overwhelming, especially when you're not sure the best course of action. So it's really important to look for professional help in the form of a tax attorney, a CPA, or an enrolled agent, and they can provide guidance and expertise on this. So they're going to be able to kind of help you navigate the process, avoid common issues, and make sure you're in compliance with tax laws. And be sure you're choosing someone who has experience in dealing with tax debt issues. Look for professionals who specialize in tax resolutions and have a track record of successfully helping clients navigate through tax debt problems. So just to wrap things up, navigating tax debt can be challenging, but there are options. I want you to be aware there are options to help you address the issue. Whether it's installment agreements or these other options, you do have options to resolve this. So you want to be sure you're proactive and, take the steps to kind of work through the problem. So keep accurate records, file your taxes on time, pay your estimated taxes, seek professional help, keep up with the payments you can make, and stay on top of it. Again, don't ignore it. The overarching theme here is do not ignore the problem. That makes it worse. So again, be sure and be proactive and look for those options, look for professional help, work through the options, and you can get this resolved if you have a tax debt issue. And also remember, you're not alone. There's resources to help you. There's professionals that can help you. And getting this knocked out, getting tax debt knocked out is really important to make sure the rest of your life functions smoothly. So, all right. So if you know anyone who has tax debt issues, feel free to forward this to them and feel free to have them reach out if they have any questions as well. All right. So with that, let's wrap it up there. So thanks as always for joining me. You're welcome to reach out anytime. My website is elevationfinancial.com. You can book a consultation if you're interested in potentially working with me, or just reach out with questions. Happy to help. All right. With that, thanks for joining me today. Have a great day. We'll see you next time.